The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, everybody, welcome back to the Diagnostic Trading Hour, where traders come to learn how to maximize leverage, minimize risk, and be one step ahead of the markets. So today we're talking about quite a few things on the bull-bear binary hour, and we are looking at corn, and I wanted to dig a little bit deeper into that and show you what we were talking about. If you look at where corn's at right now, it is at an insane, I guess you could call, resistance level. If you go over here and look at this backup, I'm looking at monthly charts, and got quite a bit of time covered here back from 03 to current. And you can see we hit this price back in June of 08. We also hit, which right after that, what happened with the market as well. We also hit this price right back around May, and pretty close to it right there in September. So we've hit this price over and over again. Corn hasn't been able to exceed this level, but we're very, very close to the high of corn. And whenever you're looking at this, you got to go, well, if it does break through it, it could definitely keep going, and there's a lot of reasons for it to break through. You want to play safe here, but the safest way to play is pick both directions, in my opinion, because it could easily just have a move way down. But really, what is there to drive the price down? You got the demand, obviously. You have the cows that need it. You got the chickens that need to eat it. You got the pigs that need to eat it. You got, of course, us humans that want to eat it. You have the ethanol demand. You have the international demand. So there's a lot of reasons why it's going to keep going up, but it's not like there's going to be another crop. So we had bad crops, and with all the droughts in certain areas, that's created lack of supply, and that has really just driven the price up. And there's really no reason for it to go down unless people just don't want to eat corn anymore or eat meat. So since we obviously see that happening, just be aware that we're right at that level. You also can go over to some of the other major ags and check them out. If we go over and look at soybeans, it's also up, and now it's actually breaking the high right now. We go over, we can check out, wheat, and we can check that out. It's not breaking a new high, but it definitely is, up in that area of where it's, either if it has broken up, it's broken up a lot. From here, last time it broke up at that level, the last time it went above this, within, a few months there, we actually saw it go up to 1350. So, keep an eye on these ags. Ags are really definitely something to watch right now. The market is bouncing off its major highs. If we go back and just look at, the S&P, and check out where it's at, and we'll back up, look out at a weekly price right here, and you'll see that we hit these prices back in May of 11, and we were also right before the fall last July, we were right in this range as well. And we're literally we're coming up on the same week where the crash began to happen last year. And we don't call it a crash, but definitely I call it a crash, but you call it whatever you want to. 300-point drop in the market over the course of a few weeks. And we're coming up on the whole debt ceiling debate. That's a big topic right now, and it's going to come up. They're not going to agree. And, the market has definitely been stalling out over here. If we back over and we look at, just the daily bars, we can check out what's going on. Came up, sort of hit this level. And, you definitely see a nice smooth uptrend, but we're running out of orders. We're running out of volume. And, had a lot of bad reports come out today. Chipotle falling down like crazy. And other bad earnings announcements. Europe's trying to agree on stuff. Spain is having riots. Their bonds are going up basically every day right now. They actually have breaking the 7% mark again. And that level, of course, is considered unsustainable. And even Italy is starting to see issues now on their bond spreads. And they're saying, hey, it's not us. It's spillover from everybody else. But whatever the reason. They're having that issue. And, of course, the president over in Germany, she's saying, hey, you know what? We shouldn't have to pay for everybody else's bad economic decisions. So, she's, of course, against the whole Eurobond idea. And there's just a matter of weeks. They're actually fighting it right now, basically in their, version of the Supreme Court, saying, is it even constitutional to put Germans on the hook for, interest for other countries when, it's not their fault. And, she's very popular right now. She actually has her best approval ratings. And she has an election coming up in 2013. She has low unemployment. They have low interest rates. And she doesn't want to put that at jeopardy. So there's going to be a lot of politics in play about whether or not she's willing to budge. And then, seeing Spain with their new president, that's, all about spending, at the same time having to do austerity measures. Just, it's a very volatile combination. So we could definitely easily see, we already seen a pullback today. We could see even more of a pullback. And depending upon how this debate goes, that's coming up over here the next couple weeks, depending on how the remaining couple weeks of earnings season happen, and also just looking at, how Europe plays out over the next 4 to 8 weeks. And we have GDP coming out. So there's a lot of things coming out that don't look real bright. And just be careful. We talked about it yesterday. Be real careful on this little pop-up, the seasonal cycle on the market. June usually is a positive month on the seasonal cycle. However, it's usually the weakest of the seasonal cycle, bullish months. And a lot of people will claim a summer rally whenever they see it happening, but then the market starts to spill over, falls down, especially in August and September, and can lead to crashes in October. Whether or not that's going to happen, we'll just have to, let the market tell us what it's going to do. Be careful not to have opinions about up or downs. Just, follow it day to day, step by step. And when we're talking about the corn, and what can you do? How can you take advantage of that? Because you go into corn, and corn's it's a little bit of a crazy thing to trade. Okay, you can literally see it move up and down, $4, a couple $100 in value, and I mean literally a split second. So when you're trading those futures contracts, it can be a little nerve-wracking depending on just how volatile it is. And if we go in, we check out corn right now. The active futures contract is December. If we break it down, we go ahead and look at minute bars. And we can just see, how far can this thing move? And, you got a couple points right there. And, here's one move right here, 784 down to, 780, come back up. That's 1 minute, a lot of volume, so that was fast. We can break down tick bar, see it even faster. But you got to be careful when you're trading this. So you got to figure out, what am I going to do? How am I going to trade it? And I like to trade it using Nadex. And one of the things on Nadex, you pull it up if you haven't got an account. Just to show you how to do that real quick, I always like to remind people just to let them know. What they can do is hop over to tfnn.com, click on Nadex, and then click on Create Account. Scroll down here. You can either start an account, and you can actually open up an account. You'll get immediate access to the account. And then you can fund the account. You only have to put $100 in to start trading. So you can have live trading, live platform, live data feeds, live charts, everything. No commissions. All they have are exchange fees. So you pay those when you trade futures and everything else anyway. So that's built in, and then you can open a demo account, and you can have access literally before this segment is over here in the next literally 1 minute. So in your information, hit apply for demo, you'll get an email, and you can see exactly how that works. You'll be able to log in. The email that you'll get will basically have, you'll choose your username, the email will include your password. And once you do that, then go ahead and hop over and log in to your demo account. When you log in, I do suggest that you go in, and on my account, you can click on settings, and you can update your password. I would recommend updating your password to one that you remember, because they'll send you one that, of course, you didn't pick, so you don't know what it is. So put that password in there. They sent you an email. Update it to a password you remember, and make it easy to log in and check it out. We can go over here, and if we want to trade corn, we can go, and we have a couple different ways we can trade it. One way is you can look at the commodities and the bull spreads. The bull spreads are if you're wanting to trade corn more like you're trading corn, okay, like you're trading futures. So if you're wanting to buy it, and as it goes up, goes down, and sort of get close to mirroring the price of the actual corn spreads. And they have a couple that are available for you. And they start trading, I want to say it's at 10:30, and they go to, I want to say 2 o'clock. And if you're ever trying to figure out, what are the trading times for the different products, because what they're doing is they're trying to mirror the floor there, you can go over to nadex.com, click on Range of Markets, and go to Commodities, and hit Contract Specs. And then over here you go to, okay, I want agriculturals. And then this will be the binary. Scroll down a little bit further, you'll see the spreads. And you can see that corn trades from 10:30 to 3 o'clock. So 10:30 to 3 o'clock Eastern time. And again, like I said, they're trying to mirror basically the underlying market. So if we go to cmegroup.com, we go to ags, we go to corn, and then we go to contract specs. And then you just go down here and you basically look at the open outcry, the pit hours. And so this is listed central. So 9:30 to 2 central, which would be 10:30 to 3 Eastern time on the corn contracts. So now that you understand that, basically what's available, you can go over here and say you can trade corn. You're going to have a couple different things you can use. Maybe you don't have access to corn charts. So one of the things you can do is you can go to what's called the master spread. It's going to be the widest one, and the way you know it's wide is just look at the distance. See, that's 200. And if I go to any of these, I'll be able to see, the widest one that's going to be the master spread. So the widest one right there, and then you can go over here and they have a chart button. Click on the chart button. You can pull that up, and this chart will very closely mirror the underlying market. It'll be right on spot with it. Now, what you want to understand, or within a few ticks, usually straddling the price. So one thing that's really important we're looking at corn, right? But we're looking at the September contract, okay, because they're following that front month contract there. So now the active contract on the market most people are trading is going to be December. So you're going to need to make sure you choose the September contract. So, depending upon what platform you're using, it may just have the month built in, or you may have to know the month. So like here, U2, U is the symbol for September. Another tip, let's say, you're trading with, Thinkorswim or something like that, and you don't know what the name of it is. Then what you can do, and I'll open this up for you, I'll show you a simple little trick here. If you're using the Thinkorswim platform, you're trying to figure it out. Go in, and if you don't know the symbol, you can just click the drop-down section here. You can go to Futures, and you can scroll down until you find the future you want, such as, let's see here, ZC, right there. Or you can do a lookup function. But if we do ZC for corn futures, and then they have the option chain, but close that down, click on Trade Grid, and that'll show you information right there. But the biggest thing, if you're trying to figure out what the symbol months are and what's going on, just click right here and say All. So if you see that it says active or all, and under all you'll be able to see like U2, Z2, H3, K3, N3, and so that will, that's sort of a simple trick for you to be able to find current front months on the contracts. If you click on that, and let's say you go over here and you want to open a chart, hit quick chart right there, and you'll open a chart for you and give you the details, or you can pull it up like I said over here. And if you're like, well, what month is U2? I still don't know what month that is. It'll actually say right there September futures contracts. I use Thinkorswim, I use NinjaTrader, and different platforms, so you can use those to be able to find your contract months. If you have more questions about that, just let me know, email me. I can even send you a list of the months and the symbols that go with them. And that's dmart@tfnn.com. Looking at the markets right now, just to give you a quick update since the last show here. Make sure you know that we're always watching the markets and seeing what's available. We got the S&P, it is basically down 1%. We got the Russell down 1.25%. We got oil up 1.5%. Oil has just been on a run over the last couple days. The euro dollar moving quite a bit, just really dropping, along with the pound dollar. Aussie dollar, not as much, but, not too well. It's dropping down 59 ticks, but the euro dollar down to, 100, over 100 ticks or pips today. And, of course, we got, corn and we got soybeans both up a lot. So corn up 1.2 and soybeans up 1.5%. So, again, we got these moving markets. And what are we going to do with them with the Nadex? How can we trade this with this coming up, understanding that, corn is at a very crucial point, and how can I trade it while at the same time having, limited risk on my trades? So I come over here and I check out one option is the daily bull spreads. And if I want to pull up that corn contract or, look at the quote anywhere, and I say, okay, right now it's quoting at 811.50, okay? So basically that's the last fill price there. And as I mentioned, if you looked at the master spread and opened the chart, it ought to be very close to where the actual contract is trading. And as you can see, we're right there, 811.50, 811.60. So when we come back, we're going to look at the spreads on corn, we're going to look at the binaries on corn, and how to play that over the upcoming weeks while we're at this resistance level. All right, hold on right there. We'll be right back after the break.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit tfnn.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to archives of those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, everybody, welcome back to the Diagnostic Trading Hour here with Darrell Martin. And we were talking about corn when we last left, and one of the things I mentioned was if you don't have access to corn futures charts, you can always use the master spread chart. It should be very close to where the underlying market is currently trading, and these are live charts. You can take advantage of them. And you can do quite a bit with them. So you can go in and you can look at minute. You can also back, like 1 minute charts. You could back up and you could, narrow down. You could look at 2 hour charts, and they're pretty easy to use. You can move this area back and forth down here. You can zoom in. So whatever it is that you're looking to focus in on that chart, zoom in, zoom out. You also can add indicators. You can add annotations to the charts, and you can even save the chart. You can email yourself the chart. You can use Fibonacci retracements on the charts. And you can set up a template and save it that way as well. And then there's settings on different chart styles and how you'd like to use it. So, definitely check that out. Take advantage of the different features in there. If you have any ideas on how they can improve the chart, just click this button right here, and you can send a message right to them on your ideas and what you think they can do to make the charts even better. So the reason that they're not actual charts of the underlying market is because it's an exchange. And, of course, one exchange can't necessarily show another's exchange's information live. So just follow the rules there. But like I said, the master spread really does mirror the market very well. So that's a great way for you to get access while maybe you're working on moving into getting futures data, future access, depending upon what broker that you use. Now, you can go over here, and if you're looking at the trades today, okay, when they opened up, and you want to, obviously you always want to consider, standard deviations. And, we talked about that yesterday. What would be a one standard deviation move in, say 1 day. And basically, a one standard deviation move today was basically going to take you up or down. Let's see if I pull the numbers up. it looks like about $10 to $12 for a one-day move. And if we go in and we look at, okay, well, what was the closing price of yesterday? And we got that right here. So we got the closing price of yesterday being right at $7.78. So if we went up or down, say, somewhere between $10 to $12, then we would look at that being 8.11, 8.10, 8.11. And here we got the high price on here up at $7.96. So we didn't quite reach it all the way up there. The whole idea of the standard deviation is that's the range you think the market should stay in. So if it gets close to that, then that's really the profit expectation you should have during that time frame. So, but we want to look at, so if we're looking at dailies, that's how we'd look at it. We want to look at our one standard deviation move. And then we'd want to go in here and go, okay, so based on that, what trades could I do today? And when the market opened up, what was the price at? So, we can narrow down, look back on the charts here. We'll go down to 5 minutes, and I'll max this out for you. Maximize the grid cell. And we'll look up and see where the market was at. Well, the market actually opened up, technically, right over here at 11:30. It dropped down, started to pull back. This is when, again, the pit opened up. All right, so we see a lot of action happening in the morning as well. But the pit opened up right here, and it opened up at 787 and dropped down about 7 points, and now it's pulling back. And so when it opened up, if you were joining in, if you were short, most people would be long, but if you're short just because, you're saying, hey, we're hitting this major resistance level. But if you want to go short, you could sell or buy the spread. And so what we want to do is go back and look at what were the strike prices that were available. And the market, again, was right around, 787, 790. And you notice that you'll see prices that will be, somewhat close to that, depending upon just where the market is when they post the spread for you to be able to trade it. So the closest trade you got right here, we got a 790. That would actually really work for your buying. So if you were looking to buy that spread, and this is actually a great example. Let's pull it up. We'll check it out and see how this would have worked out this morning for you. So you get in here, and the market opens up, and you hop in, and it's about at 8:03 or something like that. Okay, so right when it opens up here, and so there's going to be a little bit of premium built in on that trade, just with all the volatility that's been happening. And so you go in and you look at that trade, and you're like, well, okay, well, if I placed this trade and I went in and I bought it, then what would have happened? Well, you wouldn't lose any money, okay, below the floor. Meaning, what's the floor? Well, the floor on this is 790. So you can't lose any additional money if the market were to close below 790. And if you were in this trading, let's say for some reason you decided to buy right when it opened, based on your analysis, you thought, hey, it's going to do a pullback right here, then, you definitely have a pretty solid chance that's a $350 down move of getting stopped out. You'd still be in the trade. The market continues to rise back up. You have a potential to make, a decent profit. So that's the way the spreads work, is they cap your risk and put all that together. So that's, that's one example of a trade you could have done. Now, you also may have decided that you wanted to, sell the market. So if you wanted to sell, then you could you could have went the opposite direction, and you could have gone into the trade, right here, and sold it, and you could have bought it back, 5, 10 points lower. So that's one option you have. But really what I'm looking at on the market is the binaries and the weekly binaries to see these big moves that I think we're about to see being at this major level. And like this move today, nothing compared to I think what's coming. So we're going to pull up the binaries on the weeklies and talk about how that would have played out this week and how you can take advantage of it next week right after the commercial break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to tfnn.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of tfnn.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, everybody, welcome back to the Binary Trading Hour, Binary Trading Hour this morning. Welcome back to the Diagnostic Trading Hour with TFNN and Darrell Martin. All right, so what we were looking at when we last left, we were checking out some of the spreads on corn, and there's a lot of volatility. There's going to be a lot of premium inside those spreads. There's different ways to take advantage of that premium. But what we want to focus on this one on this segment was to go into the binaries, and we'll probably go back and actually check out the spreads before we're done as well. But on the binaries, again, looking at that standard deviation, what do we expect the standard deviation move to be in 1 week? And so if I go in and I can use, there's different tools for standard deviation that you can take advantage of. And Think or Swim, if you pull up the contract and you can choose, say, like expiration of next week, and make sure right here that you just make sure you choose the sigma, which is the standard deviation, +1, -1. And that's sort of the range that you should expect the market to trade in and be looking to get out if it gets close to that area. But right here we show that we stand right now, that the market is expecting, based upon just the options implied volatility that's built in, that it could go as high as 846 and as low as 734. Of course, that's going to adjust a little bit as the market changes. What it really shows us, though, if you look at the end of the day trading price, is that it has about a $56 up move in the next week, and it has about about the same on the downside, so 56 down. And so that means they're weighing it either way. And sometimes you'll see a skew to one side or the other. A lot of times you'll see the skew to the downside, but it looks like right now people are hedging in both directions. And so 50 points up and down Well, let's say the market opens up right here, like at, say 770, but make this 790. But it's looking at last week. And again, we can go back and we can pull up the actual chart here, and we'll pull it up on the week. And we can see, market was about 740, but opened up a little bit higher there at 750 and then just shot straight up. So, depending on where the market is when they actually open the market up and put the prices on, I mean, there's only a 30-point difference here, okay? So, if you think the market's going to shoot up, you can go in, you could buy the highest spread, which will, be obviously very expensive if you were selling it. But if you buy it, it'd be pretty cheap. So, $10, $20, $30. And so you go in and buy that spread or that binary on this trade, and the difference between $100 and where you buy it at. So let's say we would have bought the spread earlier this week at $10, okay? Then, or to say 1, all right, and then we'll go in here and say we bought it at $10. So if we would have bought it at $10, that's a $90 profit potential on the trade. And as you can see, right now, all of them are at $90.50. And here, pretty soon at 2 o'clock Central, 3 o'clock Eastern, they're all going to settle out. And unless corn has a big drop down, 5 points down on this one would affect it, but unless it had a big drop down, then they're all going to settle at a $100 value. So if you're the buyer, you're going to get your risk back plus the difference between whatever your risk was and $100. So $90. Now, again, make sure you're following the September corn contract. Okay, when you log in, they actually pop up a window as soon as you log into the Nadex platform, and it lets you know when they roll over to a new contract. But also, just on the order ticket on the screen, you'll see the month that the future's following, and just make sure you take advantage of that. But all these are going in. Now, one thing that I'm really big on is that I highly suggest in the binaries is, if you can, okay, like if you're in this kind of profit zone, is it worth waiting, okay, another hour and a half to possibly give up the $90 profit you made when you could take an $80 profit? In my opinion, no, it is not worth it, okay? So you can go in here and you can choose, like, how do I want to handle this? What do I want to do? But what you're saying on a binary is that I believe that the corn September future contract will be greater than 785.5 at 3 o'clock Eastern on July 20th. And so when you buy that, then you're saying that statement is true. And if you're correct, then you'll profit. If you're wrong, then whatever you put up for risk capital will be lost. Okay? It's a total win, total lose position if you don't close out before expiration. So what if corn, which easily could do, what if it dropped down 5 points before the close? Okay, so right now it's at 789. And if we go down and we look at the day and where it's been intraday, so it's already been below this price today, right? 781. So what if it does actually close down below the price where it's at right now? And you want to make sure that you don't put yourself at that risk. Now it'd have to close a lot lower, as long as you're looking at the September contract. The December contract that's coming up, is very close to that. But on the September contract, you'd have a big drop. But if that drop did come down, if for whatever reason it sold off right at the end of the day, then you could give up all your profit. So set a profit goal. And what I like to do, what I suggest is, like, if I'm getting in at $10, then I want to take profit when I can take profit at 80% of the potential profit. So let's say our profit potential, because to me it's just not worth it. Again, like if it falls down below that, you give up all your profit. Now you can go in and go, okay, well, if my profit potential on the trade is $90, 0.8, $72, I paid 10, so I could put a take profit order in just sitting there all week. So I go in, I put my order to get in, and I put a take profit in at a price of $82, and then it would fill that if that got to that price anytime during that week. Okay, so you could really take it. Basically, you can let it work for you, so you're not having to sit there. Another thing that you can do is maybe you don't like the price when it opens up. Maybe you see the price is like at $20 or $30, and you don't want to get in at $20 or $30. You may go in and you may choose to go, you know what, I want to go ahead and buy 10 of these, and I know right now, let's just say the market was quoting at $30. I'll buy them if I can get them for 10, or I'll buy them if I can get them for 15. Okay? So put that price in, and you say, I'll buy them at that price, and then hit place order. When you do that, then what that means is that you'll actually it'll fill your order if it drops. And these binaries can be really volatile, especially close to expiration. And you'll see it a little bit more on the dailies, more on the weeklies when the market hasn't moved so much. I mean, this thing just blew through every level this week. And so if we go over to the dailies and look at the binaries, get a little bit closer to where the market's currently trading. And if we look at, let's just say, we'll look at the one right where the market's at, and we'll check out that. So 50-50 there, 50-50 chance of being in the money, out of the money. Market's right around 814 on the September corn futures, and that's what we're following. So if we open that chart up and look at it, and we sort of see how the binary has moved around today, and we'll back up a little bit more, see some highs and lows here, and we can see that it has been, basically up to this price level, because that's pretty much what it's done. It came all the way down to $15 or $16. Let's see, what is our low on this one? Our low was $14.75. So, right around $15. And if you would have had an order sitting there for $15 and it popped down, and I mean, it didn't pop down for very long. It's a 10-minute time frame. And again, if we back down, we look at 5 minutes right here. And so, yeah, I mean, basically you can see it sort of stayed in this area. But I mean, it wasn't there very long. So if you had that order sitting there, then you could have got filled at that low order. So you could put an order in on both sides, say at $15, and then if they get filled, then if either one of them is able to profit, and you could even put an order on both sides for $15. Your risk is now $30 total, and so you could put an order in to take profit on either side at $30. That comes off. Now you have no risk. The other position's on now with the potential to make an additional $85 in profit. So there's a lot of different ways you can trade it, but straddling on the weekly on the corn would definitely be something to check out and demo trade it. Have fun with it. And it may take, maybe next week corn will slow down for a week. It'll stall out and doji out before it, makes its big fall. So, you definitely want to pace yourself. It's not like you want to go all in. Just because you have risk management doesn't mean you shouldn't manage the amount you're risking. Okay, so it's automatically managing your risk for you. But you want to make sure, again, that you are managing the amount that you risk. And if we go back again and we can just look at, sort of this. I mean, this was a big up move. So what happened if we go back on the chart and we look at a little bit further back time frame, and we look at the monthlies, then what can we see here? I need to get rid of the symbol here. If I just do /ZC versus putting the month there, then we can see right here what we're looking at. And I mean, you can see, it could definitely easily drop down. We can even pull up our weeklies, and that might be just a really good chart for you to look at, because by looking at the weekly chart on this, you can see what happened when it had a big up move last time, right? So we go in and, okay, so we had this massive up move, and then this is sort of where it topped out in this area, and then sort of went down, went back up, and then it started making a descent. Now, when it made the descent, it definitely made the descent. I mean, boom, 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 just kept going down. And so, that definitely shows you that, you have that trend, and it pulled back to where it was before it made the really quick upsurge in the movement. So basically it came up here, it stalled out, and then it shot up, right? So that would definitely be like your first profit target area is right down here. And we can go over here, again, same thing. When it made the same high and it started to fall, fell back to right where it was before the surge, went back up there, fell right back to where it was before the surge. When it got back up to this level, fell right back to where it was before the surge. So when it started that down move, it always is, or you don't want to say always, I guess, in trading, right? Always until. But basically it had about a 100-point drop over the next couple of weeks after it actually started descending. So just keep your eyes on that. I think that's a very promising potential trade. And the market is at a, one of the callers earlier was asking about pivot levels. And pivot levels are really interesting because a lot of traders, you want to make all their trades based on, pivot levels, and that's good. But I also like to make my trades based on targets of pivot levels. So, basically where would I want to get out based on the pivot level, and not just where would I want to get in. And so when I get in here, I'm like, okay, well, that's where people are going to be getting in trades or out of trades. So this would have definitely been a pivot level, right, that you'd have been taking profits if you were in the trade and you were long on corn. So this would definitely been an area to have done that. At least partial profits, tightening your stops, holding it over the weekend, a little bit dangerous, of course, a lot dangerous really with futures on outright future contracts. If you're using future options or you're using, maybe like if you're spreading the markets like this corn versus that corn. But if you're just doing like an outright corn contract, that can definitely be hazardous to the health of your account. And part of trading is all about surviving. So that's one of the reasons I love the Nadex platform is it helps you survive. Simply because it does limit your risk and you'll never get a margin call. It'll never get blown through your stop. And really, you don't ever get stopped out. You can have it'll stop your loss, but it won't stop your trade. And you have until the end of the day to place that trade. So if we are looking at the different spreads that are available and how we want to trade them, then one thing you want to know is how do I equalize the trade? Okay, so how do I get like when the corn moves $1, then how do I make the same amount of money? That'd be a $50 move on corn. How do I make the same amount of money on a Nadex spread, okay, in a $1 move. And if you don't know what the contract spreads and stuff like that are on corn, you can go to CME Group, and it'll tell you basically that every 1/4 of a cent is $12.50. Okay, so that's your tick amount right there. And another way, sort of a quick, easy way here. Let's see if it'll pull up for me, and I can show you this. Whenever I was first learning, I used to use this all the time. And let's see here. We got if we pull up. Yeah, see, like right here, you can see the $12.50 amount showing, and some trades that we're playing with there. But you can see at 0.25, every tick is worth $12.50. Okay, so every tick being worth $12.50 on the trade, and again, you just use a Forex active trader inside a Thinkorswim, and you can find out what tick values are worth, or just go to the source, go to the exchange itself, and you can see that exact amount. Okay, so once you've done that, then you notice we're $12.50 every quarter. So $1 is $50. $12.50 times 4. Well, now I'm going to go over to Nadex and I go, okay, well, what is every tick worth? Okay, well, every tick on every product on Nadex across the board is always worth $1. Okay, so how does it tick? How does it move? If you're a stock trader, stocks trade in pennies. They tick in pennies. All right, 0.01, 0.02, 0.03, 0.04. That's how they tick. All right, and every tick is worth 1 penny, 1 cent. All right. So when you go over to leverage products, it works a little bit differently. So what is every tick worth? And on Nadex, like I said, very simple. Whatever the last number is. So like in this case, 0.0. That decimal place, that is the tick. So 0.0, 0.1, 0.2, and every tick is worth $1. All right. So if every tick is worth $1, and that means and it's ticking basically what you call in dimes, right? 0.1, 2, 3, 4, 5. So to move $1, it has to tick 10 times. So from 0.1 all the way up to 0.0. So to go to 810 to 811, that'd be 10 ticks. So that'd be $10. So a $1 move on Nadex on corn would be worth $10 because it'd be 10 ticks. So a $1 move on the corn futures contract would be worth $50. So to equalize it, I simply divide. So $50 on corn divided by $10 on corn on Nadex is 5. 50 divided by 10. So that means if I want to trading the futures market, then I would want to go in and I'd want to buy 5 of them or sell 5 of them. And 5 spreads would help me equalize a point move in value. Now, another thing that you can do is sort of an interesting idea. I've been playing with it a little bit. Is sometimes you go in and you really just can't find a spread that's right where you're wanting it to be. Okay, so you're looking at a spread and you just you don't like the premium, the quote, whatever. And if you recall earlier, one of the things that I said is that you can go in and you can basically trade the master spread. And a lot of people don't trade the master spreads because the risk is going to be higher. So if we go in and we look at what would the risk on a master spread be, it's going to be a little bit more. So profit 130, risk 270. Sell it, and you can do 5 of these. Well, if you go over what's your margin going to be, and margin, you can even go over here to contract specs. You can pull up performance bond margins in CME, and you can go to what exchange. So if I want to say CBOT, and I can say agricultural, and then I can say corn, and I can actually find the exact regular margin on the corn futures contract. And then usually most brokers will give you a discount, 25%, something like that, 10, even down to 10% on the contract. So we'll go into the exact amount of margin you're putting up on both sides and which one makes sense for you to do to help protect you in your account, because that's all about the game. All right, we'll talk to you right after the break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain obtain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
All right, welcome back to the Diagnostic Trading Hour. We're doing a wrap-up, just sort of looking at different ways to trade corn. And we talked about the binaries, we talked about the daily spreads. We're also going to look at the master spread. And this is a little bit different thing that a lot of people haven't checked out. And I want to make sure you understand it, check it out. One of the things you can do, and let's just say you don't like the fact of, you don't want to have any time premium in there. You want to really mirror the markets as much as possible. Is you can go into Nadex, and if you trade the master spread, like I said, it's going to be very, very on par with where the market is currently trading at. And so, here's the current market quote, and here's the spread. So you see, we're right lined up with where the market's at on the master spread. You could trade that. Now, with the master spread, it's going to be wider. Okay, you may have more profit potential, less depending upon which direction you're going at the moment. But you can take advantage of that. And why would you want to do that versus just trade the outright corn? Well, one, you're going to cap your loss. Okay, so if the market does move 4, 5, 10 points, whatever, against you really quick, you can't lose more than you put up. So in this instance, you couldn't lose more than $130. If you did 5 of them, you couldn't lose more than $650. Okay. By the way, not only does that cap your loss, but that is your margin. If we go over and look at a full-size futures contract, on the CME, then you're looking at, let's see, that's the mini corn. If we go up here and we look at the corn contract, then you're going to be looking at around $2,000 in margin. And let's say we break that down and we actually look at day trading margin. So different brokers have different margin rates, different rules and requirements. Mine, it's about $710 margin requirement. So $710 versus $650. So I'm putting up less money. I'm trading a spread that is very closely mirroring the market. Okay, I've capped my risk really at my margin. Less margin, capped risk, and so basically better use of my money. It's a higher return on investment because your margin on futures is not your return on investment. You can't say I only put up $500 to trade this. I made $500, so I made double my money. Well, no, because you had $500 plus any floating P&L. Okay, on here, whatever you put up, if you put up $500, then $500 is whatever your return is. If you have a return, that is your return on investment. So it's a way for you to mirror the market by using the master spread. And even though you're not going to get I like the other spreads with the closer floors and ceilings for the advantage of you have really good risk-reward ratios built in. But if you're going to go in, especially if you're a scalp trader, you're wanting to scalp trade like oil for 30, 40 cents, corn. If you want to go in on the S&P, the S&P actually ticks in 0.1 versus the E-mini ticking in 0.25, so it's actually ticking in your favor. This is a really interesting way. I've actually been playing with this over the last couple of weeks. Because I have some traders that I talk to that are scalp traders, and they're like, hey, the premium thing's sort of messing me up because I only want to get in and get out, for 30, 40 cents. And they don't want to have to wait for it to move, 30 cents before they really start, seeing the money come in. So this is a way that you can take advantage of that. So check it out, play with it, demo trade it. You could demo trade a master spread, and you could also demo trade it to, your regular spread. Now, you don't have to do the master spread. You can do one that's more narrow, that's going to be more in the middle. So like right here, you have 810, 830, and you could lower your risk on this one as well. If we click on that, and it's going to be right in the middle. Okay, so again, it's going to be very close to where the market is currently trading. So it's just straddle in that area right there. And we go in and we choose one, and buy or sell. It's like basically a 1-to-1 risk reward, just depending upon exactly when you click on the price. So if we end up getting in, we balance it out. If we got in at 820, like we were getting a second ago, and we put in 5, and you can put your order in to sit there at 820. And so it's a $500 risk, $500 reward, still cheaper than the full outright margin. And then on the mini-sized corn, just an idea for you, you can actually do one mini-sized for one spread. So you can actually go in here and put up a $100 risk on this trade. Now, mini-sized corn, day trading margins probably about $150. Regular margins like about $472. So it allows you to trade a smaller position size. But anyway, that's a whole segment there on corn. Check it out. It's going to be a fun topic over the next couple of weeks. And I appreciate everybody being on the show. And I will see you next week. Everybody have a great weekend.